Greetings, everyone. This is the eighth wonder of the world, introducing compound interest. Welcome, stock market investors. Today's episode is on the index fund sector, which are iShares owned by BlackRock. But before I get into the episode today, I'm just going to do a quick rundown of my portfolio. Um, Currently, I have 78 assets under management. So as you can see down here, starting off with Google, pretty much I range from 1,000 all the way to $1. So pretty much these are my 78 assets that I currently have under management. I'll scroll through them real quickly. Once I hit 100, I'm gonna go ahead and do a review of my strategy on why I picked these certain stocks, and pretty much I'm a sector investor, so long term. So that's pretty much my strategy. Well, for 2019 it is, because each year I reevaluate how I'm investing. So as you can see, it's dropped. This is my new speculative stock, is NIO. As you can see, it's up. I bought it yesterday for $7.30. So um, really, they're saying anything penny stocks are considered speculative. So now I'm starting to understand that also. So pretty much anything under $10 is speculative. But there's a lot of bank stocks in there too. So I mean, they're pretty solid. So um, I'm learning to build courage to invest in speculative stocks. So, and I did a video on that on the NIO from China, the electric company, the competitors for Tesla. So, but as soon as Tesla drops down below 300, I plan on buying a share of them, because I also believe in them in the future, especially with the alternative energy, because it's just so much our planet Earth can take of the pollution from oil, petroleum. So this is pretty much my 78 assets under management. And then the quick breakdown of my strategy for 2019 is, currently my portfolio, I'm investing 60% stocks, which now I come to find out that the stocks have two categories that I'm seeing. Um, the first category is fast growth valuation with no dividends. Those pretty much are like your Googles, your Netflix. Um, they're fast growth valuation, but they don't give out dividends. Pretty much your tech companies. And then the second category is slow growth valuation with dividends. So that's pretty much like McDonald's, 3M, Visa, Johnson and Johnson, those type of companies. So pretty much, I do with that 60% stocks. I pretty much split that 30% fast growth valuation with no dividends, and then I split the other 30%, the other half, with slow growth valuation with dividends. So, and then pretty much monthly, those percentages will change within those two categories. Maybe I'll go more bullish on the fast growth valuation, or I'll go more bullish slow growth valuation, which will change up the percentage, where I'll probably go, if I'm feeling more towards the fast growth, I'll probably go 40-50%, and then just do 10% slow growth valuation, and then vice versa. If I'm feeling more, if I see companies on discounts, I'll go more slow growth or fast growth, whatever the two. So pretty much now I'm starting to see like more of a detailed look at really how that there's really two categories in stocks that I'm seeing. So, and you can apply that to global stocks also, buying companies in other countries that follow the same categories: the fast growth valuation with no dividends, and then slow growth valuation with dividends. But from what I've been coming across, globally, I haven't seen any fast growth valuation with no dividends. Well, I take that back, in China. So pretty much like Baidu, Alibaba, uh, the tech companies in China. Pretty much what I've been observing is the U.S. and China are the two big players when it comes to technology. So that's what I've pretty much been what I picked up on patterns. Okay, and then 30% goes to index funds, which I'll spread it across. I'll invest in iShares, SPDR slash S&P, and then Vanguard. Those are the top three. And then once I get solid in those, then I'll start going into Power Shares and Wisdom Tree. But that's further um, down into the future. And then the remaining 10%, I'll split that in half. 5% is bonds, ETFs, where uh, bonds, ETFs, I'll invest within iShares, SPDR, SP, and then Vanguard. They all three hold bonds, ETFs, and then REITs, 5% REITs. So pretty much, I like REITs because well, it's real estate, and then also they pay monthly dividends. And then, what I'm gonna start strategizing on REITs is pretty much I know they pay in cents, but get my REITs to first get them to a dollar, getting paid monthly a dollar, and then once all my REITs are at a dollar, and then go and then double up to $2, and then once all my REITs are at $2, then go to $3. So little, so I'll plug in my REITs, dollar by dollar until um, I'm up there in the hundreds. So pretty much that's how I'm looking at it. So looking at it to get it to the dollar. Once I build my confidence where all my REITs are paying at least a dollar, and then I'll turn around and then double them up where they're paying me $2 a month for each REIT. And then because I think with the REITs there, I found pretty much 50 companies. So if I can get those 50 REITs, and then they pay um, monthly, where they're paying a dollar each, so that's $50 from each REIT. And then once I get all 50 of those to a dollar, then I'll double them up, and then $2 a month, so that's 100 a month, and then pretty much grow it that way. So, um, so yeah, that's pretty much my strategy for 2019. That's how my investing style for this year is. As you can see, I'm up $6,030.92. As you can see, all I pretty much look at the all because this is pretty much my cumulative investing from start to finish. So I'm not concerned with the 1 day, 1 weeks, 1 month, 3 months, 1 year. Those are for traders. I'm not at that level yet. That's probably in the far future. Once I get the basics down, I'll probably open up a separate account just for trading. But I'm gonna keep this strictly for long term investing, buy and hold for 30, 40, 50 years into the future. So, and that's my projection on this portfolio. Okay, let's get back into it. This is the index fund sector, iShares, owned by BlackRock. So I'm gonna show before I jump into it, I'm gonna show a little background on what BlackRock is. I don't know if you guys know what this BlackRock is, but I come across it just doing like researching. I did a video on global stock investing, finance sector. So pretty much I came across BlackRock. Um, BlackRock Inc. is an American global investment management corporation based in New York City, founded in 1988, initially as a risk management and fixed income institutional asset manager. BlackRock is today the world's largest asset manager with 5.98 trillion in assets under management as of December 2018. BlackRock operates globally with 70 offices in 30 countries and clients in 100 countries. Due to its power and the sheer size and scope of its financial assets and activities, BlackRock has been called the world's largest shadow bank. So it's a little background information on BlackRock. If you guys want to read the history, there it is. Pretty much BlackRock, located in Midtown Manhattan in New York City. It's public. It's traded as on the New York Stock Exchange as under BLK. It's a component of the S&P 100, S&P 500. Industry Investment Management, founded in 1988, 31 years ago. Headquarters, New York City, New York. Area served worldwide. And then it gets into like key people, products, asset management, the revenue, as you can see, operating income, net income, AUM, total assets, total equity, number of employees, subsidiaries, and then they have a website. So that's BlackRock. So if you guys want to check it out, there it is. And then Blackshot, Black Blackshot, BlackRock owns and manages iShares. iShares is a family of exchange-traded funds, ETFs, managed by BlackRock. The first iShares ETFs were known as World Equity Benchmark Shares, WEBs, but have since been rebranded. Each iShare fund tracks a bond or stock market index. Stock exchanges listing iShare funds include the London Stock Exchange, American Stock Exchange, New York Stock Exchange, BATS Exchange, Hong Kong Stock Exchange, Toronto Stock Exchange, Australian Securities Exchange, and a number of European and Asian stock exchanges. iShares is the largest issuers of ETFs in the US and globally. So that's pretty much what caught my attention with iShares and what got me more into index funds. So um, I started looking at this in this company. So now it's I'm adding because last year I was pretty much 95% stocks. I didn't have any type of index funds, um, no bonds, ETFs. I had like I think two REITs. So I was more into the last year was my first year, so I was pretty much getting to know understand the waters that I was swimming in. So I was pretty much stocks and 95% stocks last year, and I was about 5% REITs. And then what happened? My experience when with me holding majority stocks, pretty much this is one of the this is probably the biggest lesson that I learned on December 24th, 2018, when I was holding 95% stocks. So as you can see, I lost close to $500, and I didn't know. I held my grounds. Deep down, like I was fighting my emotions. I didn't I didn't know what to do. So pretty much, I just told myself, just ride it. This is your first year, get a feel for it, and then pretty much I recovered. And as you can see, I'm up 5.5, 5.50%, which is about $300. The reason why I'm up, and I noticed today the market's been real shaky, but I mean I'm still holding my grounds. As you can see, because of the way I'm holding my portfolio with the 30% index funds. I cut, instead of 95% stocks, now I'm at 60% stocks holding, 30% index funds, 5% bonds, ETFs, and then 5% REITs. So that's pretty much what's keeping me afloat, and that's what I look at every daily is my pretty much my all, and making sure that my portfolio stays in the positive. My goal is with my all is to get it between 7 and 10% annually. So each year, if I can go past it, it's cool. But the way um, my portfolio is set up, it's pretty much just to get me 7 to 10% annually returns, and I'm happy with that. Because this is pretty much I'm building this. This is my money tree. This is pretty much generational wealth. I'm passing this on to my family, to my kids, so they can continue, and I will teach them. Or one day they'll look at these videos, and once I'm dead and gone, they'll look through and be like, "Oh, okay, so this is what he was on." So that's why I'm pretty much going through each each company, each trade, well, I'm not into selling, so pretty much just buying and holding, and just playing the compound interest game. So pretty much that's how I plan to make my millions, is through compound interest. and just takes away all the stress. I have to like stress over and try to sell. Like, I see a lot of YouTubers, they're stressing, they're selling, and you know, they're in negative. Well, a lot of them don't ever go to the all, because that's really what their portfolios, how it's performing. They'll show you, they'll say they're a long-term investor, but then they'll show you stats from, like, as they are traders or something like that. So I just don't understand that concept, but um, kind of a little confused for me. But I pretty much, if I'm gonna do this, I'm gonna do it right. I'm gonna show you guys how to play this game. So, and not to stress. And I've learned that now with this um, with this strategy that I'm doing for this year. And um, I really haven't well, I've gotten comments about, how, why I'm holding so many companies. But it's like, okay, say for example, I see a lot of people investing in companies that don't pay dividends. Yeah, they're going for the valuation, but my strategy is, if you got all that in just valuation, where's your monthly dividends, in other companies. So that's why I kind of split it, 30%, 30%, where I'm not just going 60% stocks with fast growth valuation with no dividends. I'm pretty much adding more dividends into my portfolio monthly. So my goal is, with dividends, get it to $100. That's my first goal, and then once I hit 100, then I'll just pretty much copy that same recipe that I followed to build, my first $100 monthly, and then get it to 200, 300, 400. It's simple. I think getting that first $100 a month in dividends is the hardest to do. But I notice a lot of other people, the way they're doing it. I mean, and I'm not knocking it, that they'll buy a company with, pretty much put all their money into it, and they'll collect it that way. Like, I've seen they're collecting like $20, $50, but you got to understand too, the majority of stocks that pay dividends, they pay every 3 months. So what about the months in between, when you're waiting on um, those months where you're not getting paid? So pretty much, I'm finding companies that pay more in the monthly, which will help me out with the index funds, um, bonds, ETFs, and then REITs will pretty much fill in, you know, the months that I wait for the quarterly months that majority of that I've seen from stocks are paying. So, all right, so let's jump into it. This is the index fund sector, iShares, owned by BlackRock. Okay, pretty much the first company I'm gonna show you guys is BlackRock itself, and this is on my waiting list. As you can see, this is the number of people that own BlackRock, so it's not really that popular. Um, I found out from a YouTuber what this is, so I'm gonna show you guys. Pay attention more to people owning it as a curiosity thing. Let's go to the 5 year. Pretty much it peaked on January 19th, 2018 at $590.26. So as you can see, I mean, that's why I really want to pick it up under 400. I want to buy a share of them under 400, but I know that it'll reach this. Really, the valuation of this is 590, and I believe it'll shoot to that, because if it's got there once, it'll get there again. So um, the current market price is $437.22. About BlackRock Incorporated engages in the provision of investment management, risk management, and advisory services for institutional and retail clients worldwide. Its products include single and multi-asset class portfolios, investing in equities, fixed income, alternatives, and money market instruments. The company was founded by Ralph L. Schulstein, Susan L. Wagner, Robert Stephen Capito, and Lawrence Douglas Fink in 1988, and is headquartered in New York City, New York. The current CEO is Larry Fink. Employees 13,900. Headquarters New York City, New York. Founded in 1988. Market cap 33.33 billion, so that's mega. PE ratio 16.43, nice. Dividend yield 3.06, so um, that's a nice dividend yield for a company like BlackRock. Buy 88%, hold 12%. I haven't seen a buy that high for a company in a minute. Okay, so that's pretty much this is BlackRock, the owner and manager of iShares. So I'm gonna get into the iShares. I'm gonna give you guys 5 iShare index funds. Okay, the first index fund from iShares is iShares Core S&P 500 ETF. Okay, let's go to the 5-year. As you can see, nice upward trend. Let's check out the peak. It peaked on September 21st, 2018 at $295.36. Current market price is 280. About IVV tracks a market cap weighted index of U.S. large and mid cap stocks selected by the S&P committee. Market cap 159.07 billion. Whew, mega. PE ratio 19.33. Dividend yield 2.14. So as you can see, and one thing about before I go any further, one thing I'm liking about Robinhood is pretty much I can buy companies, global companies. I can buy index funds from iShares, SPDR, and SP, and Vanguard, PowerShares. Pretty much this is like a hub for pretty much buy and hold for pretty much the market, the global market in stocks, index funds. You could purchase bonds, ETFs, and then REITs. So this is what I'm starting to figure out too. And then as you can see, they have cryptocurrency. So with cryptocurrency, I plan on with my dividends just buying like the crypto that's pretty much under $1 and just buy and hold. Well, I think they're just for, they have cryptocurrency just for viewing. So once it's ready for purchase, I'll be ready to lock and load. So that's another interesting about the Robinhood that I like is pretty much the convenience, and you pretty much can hold everything on here. You don't have to go here, you don't have to go there. You don't, if you want index funds or I've noticed people signing up to Vanguard, going to their website and purchasing off of their website. But I've noticed with Robinhood, you could pretty much pick up from anybody, anywhere, whatever strategy you're following, except day trading. I've seen a lot of people saying that day trading is not up to par. So this is pretty much for buy and hold for long term. And as you can see, 4,211 people own iShares Core. So interesting. Okay, the second iShares fund is iShares Russell 2000 ETF. Okay, let's go to the 5-year. As you can see, upward trend. Peaked on August 31st, 2018 at $173.02. The current market price is 157.50 cents. About IWM tracks a market cap weighted index of U.S. small cap stocks. The index selects stocks ranked 1001 to 3000 by market cap. Market cap 43.54 billion, mega. PE ratio 43.83, and then dividend yield 1.58. The next iShare index fund is iShares Dow Jones. Dow Jones US Real Estate ETF. Let's look at the 5-year. Hold on. I've never seen that before. How did... Oh, okay. That was interesting. Okay, this is the iShares Dow Jones US Real Estate ETF. Okay, as you can see, real rocky. Peaked on... So it's pretty much back at its peak. It peaked on July 29, 2016 at $85.40. Current market price, $84.47. It was back at its peak. Uh, People that own iShares Dow Jones US Real Estate ETF is 649 people. About IYR tracks a market cap weighted index of U.S. real estate equities listed on the major U.S. exchanges. Market cap 4.40 billion, PE ratio 26.19, dividend yield 4.48. So nice dividend yield. Okay, that's the third iShares index fund. The fourth iShares index fund is iShares S&P SmallCap 600 ETF. Okay, let's go to the 5-year. As you can see, beautiful upward trend. It peaked on August 31st, 2018 at $90.31. Current market price is $80.75. 1,434 people own iShares S&P SmallCap 600 ETF on Robinhood. About IJR tracks a market cap weighted index of primarily small cap U.S. stocks. The S&P committee selects 600 stocks representing about 3% of the publicly available market. Market cap 44.81 billion. PE ratio 33.25. Dividend yield 1.70. So as you can see, they all pay dividends. That's nice. I just gotta. I don't know if they're quarterly or monthly. So once I purchase, I'll let you guys know. Last but not least is iShares Core MSCI EAFE ETF. And as you can see, before I get into that, the MCIs, you have emerging markets, you have total international stock ETF, you got the Europe ETF, international developed markets, Pacific ETF. I plan on buying one of each. One of each. Oh, I currently own one share of iShares Core MSCI EAFE ETF. Let's go to the 5-year. As you can see, it peaked on January 26, 2018 at $70.84. Currently coming out of a bear market. Current market price $60.02. 761 people own iShare Core MSCI EAFE ETF on Robinhood. Pretty much I bought at $62.91, so I'm down $2.89. About IEFA tracks a market cap weighted index of developed market stocks in Europe, Australia, Asia, and the Far East, and excludes the US and Canada. It covers about 98% of investable markets. Market cap 55.54 billion. PE ratio 12.95. A nice dividend yield of 3.49. So see, so I bought a share on September. Yeah, so they pay um, pretty much like the stocks. They pay every 3 months, and just for one, I mean, look at how high, just off one share for $60. That's pretty high. Because a lot of companies that I own in stocks, they're paying and they're double this amount, and there's less dividend. So it's another strategy that I'm looking at also. So there you have it. Yeah, I already went over that. So those are the five iShares iShare index funds, and let's go back to all. And the total investment for these five iShare companies plus BlackRock comes out to $1,091.48. That's what owning a share of BlackRock and all five iShares. In conclusion, BlackRock, one share of BlackRock is $431.95. Dividend yield 3.06. iShares Core S&P 500 ETF. One share of iShares Core S&P 500 ETF is $279.07. Dividend yield 2.14. iShares Russell 2000 ETF. One share of iShares Russell 2000 ETF is $156.19. Dividend yield 1.58. iShares Dow Jones US Real Estate ETF. One share of iShares Dow Jones US Real Estate ETF is $84.53. Dividend yield 4.48. iShares S&P SmallCap 600 ETF. One share of iShares S&P SmallCap 600 ETF is $80.17. Dividend yield 1.70. Last but not least is iShares Core MSCI EAFE ETF. One share of iShares Core MCSI EAFE ETF is $59.57. Dividend yield 3.49. Outro. Subscribe to the channel. Comment any questions or recommendations you have. Like if the content was inspiring for you, and share this information with other global stock investors. Until next time, let your compound interest make you a millionaire.